Now, I put this chart here just to show everyone the trend of the market. Now, the gray line is showing the rent in Beijing from year 2000 to now. And you can see that from year 2000 to 2010, that 10 years, the rent has not really gone up that much. It's pretty much flat. But from 2010, suddenly, that trend really spiked because the demand has really come up. And in the same time, the supply side, this is the vacancy side, you see the two spike, which is to do with the way we urbanize our city. In 2009, you have the second spike, the red one. That is when Beijing held the Olympic. Remember, at the Olympic time, there was a cluster of very concentrated supply of office space. And very quickly, the next 2-3 years, all this concentrated supply was digested by the market. So if you look at the trend, still the vacancy has come down really low now, it's 3%. And the rent has gone up. At the moment is 318 yuan per square meter per month. And Shanghai is very similar. Again, the prime office rent went up 24% in the last 2 years, again record high. This trend continues to go up. And Shanghai supply also runs through a concentrated supply. Again, in 2010, right, when Shanghai hosted the Expo, was it 2010? Yeah. So you can see that, typically these cities, when Shanghai was intensely urbanized at the time of the Expo, and therefore there was a concentrated supply of office during that time. But again, very quickly, in a very short period of time, 2 years' time, the market digested this. These are very important trends to remember why SOHO China is so narrowly focused in these two cities. This is showing, for the last 17 years, how much we have built. Year after year, we build more and more and more. Again, never been outside of Beijing and Shanghai. By the time we finish this current portfolio by 2015, SOHO would have built 5.2 million square meter. Then these are nearly all office and little retail, with only a few residential projects in this whole portfolio of development. The red ones are the new completion, and the gray ones are just the accumulation of the previous completion. Last time when we announced transition, many of the analysts didn't quite understand. I realized I didn't do a good job to explain it well. That many people ask that, you make the transition, do you know how to lease? Do you know how to manage the property? Because you haven't done it, right? But the truth is, not only we have done it, we've been doing it for a long time. So look at these. These are all the projects that are managed by SOHO. All of these are property managed by SOHO. And all of these are leased by SOHO. So not only we've been managing the properties that we develop, we're also leasing on behalf of our clients. Remember, our clients used to be all private wealth people, and they don't really get into the business of leasing. So it was SOHO who does all of the leasing. And that's why you can see that all of these projects together were all leased by SOHO. So our understanding of the market, leasing market, our ability to lease, our experience to lease, our experience to manage the properties is really very extensive. I think the part that's kind of new to SOHO is the Shanghai market. So for the last 2 years, we've been very focused in building up our capability in Shanghai on the leasing, on the property management. Again, this is not something we haven't done. We've done a lot of that in Beijing. We're just extending that to Shanghai. We are the largest landowner on the bond in Shanghai with the very controversial bond 8.1 project plus the bond SOHO. By 2014, you will see the completion of bond SOHO, and then by 2015, you will see the bond 8.1 completed. So this will represent a very high quality asset in our portfolio, and we will be the largest landlord on the bond. This is a Qianmen. For those of you who have been there, know this is a retail development. It's a shopping street, very much focused and geared towards tourism. And we have a second phase will be completed next year. This shows our 1.7 million square meter portfolio. And each of the years, how many projects will be completed. For instance, last year, the completion mainly came from Galaxy SOHO and Century Plaza, and a little bit from Qianmen. And this year, this coming 2013, we have two major projects in Shanghai will be completed. One behind Xintiandi called Fuxinglu, and the other one is in Hongqiao, Sky SOHO. That's a very sizable project in Shanghai. And then in 2014, we have more. 15, we have more. This is where the projects are in Beijing, and this is where the projects are in Shanghai. You can see that the red dots are less in Beijing than in Shanghai. So it is our intention to continue to add assets into our Beijing portfolio. Again, Beijing is a market we know very well, and we want to do well in that market. We'll continue to add more assets. You will see a lot of that this year. For 2013, right, so what will be the company's focus? We've got the high yield, we've got the cash, we're very lowly geared. We're still in an environment where interest rate is very high and credit is relatively tight. We're still in an environment where supply of prime office is very limited. And so we believe the asset value is still very low. And just look at the equity value. We're still trading at 60% discounted NAV. And that reflects how people are looking. It reflects the asset value. So we still believe this is really a year for acquisition. So we actually put out a target acquisition of 10 billion yuan for this year. Now, do we still have enough money to fund the capex? Plenty of capital. The source of fund is 29 billion, and the use of fund is 24 billion. So there's plenty of cash to carry out our plan. This is a newly completed Galaxy. If you're coming to Beijing, please let us know. We would love to host you and show you around and take you to visit. It's a beautiful architecture. This is the inside. This is the day when we launched the project, and 30,000 people came to celebrate it with us. And this is Sanlitun SOHO, a project that we sold a while ago, so we're showing it. But this is actually not in our portfolio anymore. Recently, there is a very interesting IPO. I think you all know that Maple Tree did its IPO. And Maple Tree, we of course, watched it very closely, and we wanted to see how the market reacted to that. I was told that it was 20 or 30 times oversubscribed for the parts that went to the public market. It's very encouraging, and it's priced at 1.9% premium to NAV. Now, I think that's a really interesting phenomenon to see that Maple Tree has two assets. The REIT, I'm talking about the REIT, it has two assets, right? One in Hong Kong, one in Beijing. And we know that the one in Beijing is not in the the most prime location. We would call that a B location. We know that product, the building, has been there for a while, so again, it's a slightly older building. But again, I was really encouraged to see how well the market gave it a warm welcome. And now, if you can take a look at that valuation versus where we are, Mapletree, I think, promises to pay 5.6% dividend. SOHO today pays, for the last 3 years, we've been paying 5.5% dividend. And then we're trading at 61% discount to NAV. I understand the discount is probably attached to us because we're still in the early stage of completing, in the early initial stage of our transition. Still, we need 2 years to complete all of the 1.7 million square meter portfolio. But already we can see the roadmap to get to how we can get to the full NAV level. Currently, SOHO shares are trading at below our land cost. So per share price is it still 5.8? I guess it's higher today, right?
Yeah.
So maybe trading at the...
Over 6.
So trading at the land cost, not even the land current price, it's land cost. Again, I think it's encouraging to see Mapletree's valuation. I put all of the numbers in the appendix. I think we will distribute all the little books. So for those who need the numbers, you will see the numbers now. Can you distribute the books? We'll open the Q&A now. Thank you very much.